5th December, Monday, MAO with Cal. Wow, I am not short. Now, this is a brain blaster. Apparently, now many people are all screaming, is Michael Burry okay? Has he flipped? Because there was just about a month ago, he was calling that you don't know how short I am. And now he said that I'm not short. So the market is crazy. A lot of YouTubers are going nuts on this. But if you ask me, I don't think he has flipped. I think that's just something that missed the eye, and I'll share you more in details later. And of course, I'll give you my forecast on the crude oil. You don't want to miss this today. Now, today sharing is a blockbuster sharing, loads of information itself, so watch out for it, okay? Now, once again, disclaimer apply as usual. Please make sure that you do your risk assessment, and thank you AIMS for the kind sponsorship. Now let's talk about the NFP first, okay? The NFP came out 263,000 jobs added. This is one real crazy job report, because everyone was looking at 200,000, 210, and some was 185, 190. But when it came out 263, immediately the reaction was the market is still very hot. In fact, employment data is so hot that it seems that whatever Federal Reserve have been doing doesn't make sense at all. And you can see right now that from the 1st from January until to date, the unemployment rate has been very consistent between 3.6 to 3.8. So which means that whatever the Federal Reserve is doing right now for their interest rate hiking has no impact on the employment. Hence, therefore, inflation will still stay. So even though it came off 9.2 to 1.1, now to 7.7, it's not going to work. If Federal Reserve really want to bring it down to the 2% to 3%, they have to do more. And that is why the thing is this: Jerome Powell actually said that, right, they know that inflation is still at a high level, and they'll try to do as much as they can, but to prevent they get crazy or get it wrong, they have to do it a bit slower. So that is the reason why he has a lot of what I consider as a dilemma right now, and he can't really make up his mind, because he really don't want to behave at what happened in the 1970s versus now. But of course, as you can see the number, it doesn't make sense. And the Wall Street sees this blowout job data as a wrong report at the wrong time. So apparently, this actually basically shows that the Federal Reserve is not able to battle and win this inflation war, okay? And because of that as well, right, the Treasury shot up, okay? That is not a good sign. And so that's why the stock market actually came off at the very beginning. Now, to have 263,000 jobs, even after the policy rate go up by 350 points is no joke. The labor market is hot, heaping pressure on the Federal Reserve to continue raising policy rates, okay? So this is another strategist from Principal Asset Management saying that, and of course I also live with it. But the point is this: I feel that the Federal Reserve is going to pivot soon regardless. Why? Because the numbers are going up, and that's the reason why central bank around the whole world is actually pulling back. Example, Bank of Australia. So all these are showing that, right, the high rate or the fast rate hike, right, is not helping inflation, it's killing it, in a way killing the market. So you can see right now the stock market actually gapped down first initially. There was some volume, but after that steadily, you can see on the screen right now, very steady, the market basically recovers, right? The volume has been okay, decent, but towards the second half of the day, you can see that the stock market picked up strength and went all the way up to cover the gap. So is it pure strength here itself? Now I beg to differ. I believe that this is just very automated from some algorithm was buying, because the overall volume of the entire day of Friday was much lesser than the usual, which despite it's an NFP night. So I felt that, okay, I felt that something is just not going well, okay? So my belief is that US crude oil now has all the right reason to go to $100. But of course, when I said this, a lot of people say, no, Cal, you have not read the news. The European Union officials set Russian oil price to be kept at $60 a barrel. Now, you can do what you want to do, my friends. But the point is this: I don't think the Russian will actually agree on this. So Venezuela, Chevron formally signed the oil contract. So that means that they're looking at oil price to go down, and that probably stimulated the stock market to go up or recover on Friday. But again, like I say, OPEC is going to come in, and OPEC most likely is going to cut production. Okay, now the thing is this: we all know that MBS doesn't like Biden at all, and of course recently Biden purposely flew down to Saudi and talked to them, and of course Saudi said, okay, fine, we just increase a little bit, that pressure down crude oil down a little bit, and of course with the 1.5 million barrel per day from the White House, okay, fine. But you notice that the oil price have been staying at $80 for quite some time, right? So if you look at it right now, I believe, okay, this is a weekly chart by the way, I believe that this will not hold. Alright, in my opinion, I believe that oil price is going to stay above $80, okay, in my opinion. And as long as it stays above $80, it will hit $100 soon, okay? Now, where will that be? Well, my projection is somewhere around March period, okay? By March, okay? By March 2023, I believe that this crude oil price will go back to $99 to $100. Alright, of course that is a per se that the crude oil doesn't go down. Now of course $60 is where it is here, and the moving average MA 200 is somewhere at $65. But I say the SPR is ending soon, and I believe that OPEC will cut production because probably they want to make some money. And I think that right, with China coming back in itself, the crude oil price will go up. So if the crude oil price goes up and the interest rate environment start to pivot, then what will happen? Well, we have a big problem. So that is where, but the banks are looking a bit shaky right now. The credit fund outflow in 2022 unwind last year inflows. All right, in short, trying to say is that right, there are more and more shakiness in the bank sector. And of course, we just saw that Credit Suisse shares just hit record low. Now, I've been calling for sell on this counter, and it has proven to be right. And I still believe that it will go down to about 2 franc, all right, and that is something that will shake the entire market. All right, now one thing is that I noticed that Nancy Pelosi, right, now she has already stepped down, we understand that, but oh my god, Nancy Pelosi have just sold quite a substantial amount of Visa. All right, right. So to me, I think that she knows something, okay? And when she do something like this, you should be very, very careful. And I believe that the financial market may be pretty exciting in the time to come. All right, so what did Michael Burry just flip? No, I don't think so. Yes, we know that Michael Burry have been very negative. He have been calling for sell on a lot of things and stuff, but the thing is that in November 15, he tell the whole world that you have no idea how short I am. And of course everybody in their mind was thinking, hey, this guy is calling for short, but the stock market has been going up, right? So people are saying that, hey, you're wrong. Then of course, just only 2 days ago, Michael Burry came out and said, I'm not short. Okay, so people say, hey, this guy is a joke. He was calling for short, and then after the market didn't go down, now he turned around. So there's a lot of different thinking here. Is it because he is now, he has cut his position from short to go long, or he hit stop loss, or what's the reason? Now I think that there's something that you may miss out, and my opinion is this, okay? To me, it means more than the eye. Now we all know that Michael Burry back in 2021 in the August period was very heavily short, okay? He was heavily short in the market, especially on the innovation, Elon Musk Tesla, and of course in the treasury ETF, the 20-year treasury ETF, the iShares 20 plus. Okay, the thing is this, you must understand that back then itself in November, he has closed the position, right? So that means that he doesn't have the bond position, but you must understand he can actually use the OTC options, which don't need to be shown in the filing. That's my point. So in my opinion, that if Michael Burry is very bearish, why would he actually cover his short? Now, of course, you may say, but the thing is that he say, I'm not short. Well, again, it all depends on how you see it, okay? Because you can see right now, 2 weeks ago, Michael Burry is saying that, he's kind of heavily short and he believed that the market will go down, right? Just a couple of days ago, he is actually saying that he's actually believed that there'll be an extended multiple year recession. So imagine this, how can that be? So what I believe is that he's no longer short on the treasuries. Basically means that he expects the Fed to pivot soon, and if the Fed pivot, definitely treasuries will go up, right? And then the yield may come off. But when the yield comes off itself, right, the stock market will not like it, because we have seen many times before, when the Federal Reserve pivot, the stock market goes down because there will be panic. The panic will come in and it will cause a lot of problem, and things will go very ugly. So you can see over here, oops, sorry, hold on a minute, there's some PowerPoint issue there. Okay, a moment. All right, Let us hear what Mike Wilson has to say. Okay, I'm going to play a video for you, and you look and hear carefully, and you probably will understand the key point here. Now, again, apology on that. This particular word China, please do not be bothered by that, because I think it's a typo error here. Please be noted. There is a new code that I left for you today, a new code. Please use the new one. Apology on this typo. Alright, let's look at the video and let's us hear what Mike Wilson has to say, and please take note of what he said, because it's going to be very, very important and crucial for all of us. Let's take a look.
In terms of that bear case scenario?
Well, once again, I mean, the bear case scenario assumes we have probably a modest recession next year. And in that scenario, all that happens is revenue growth goes flat, maybe slightly negative, but that will make the negative operating leverage even worse. And so that's $180 in earnings next year. So with $180 in earnings next year, you know, 3,000 is not really a stretch. So look, we don't have a crystal ball, unfortunately. I wish I did. In terms of what I'm most uncertain about is the timing of this. You know, we thought it could have actually happened in the fourth quarter of this year, needing these earnings revisions. And that's one of the reasons we flipped positive in October, is we felt like it's going to be pushed out. And that's what's happening. Could it get pushed out further into the middle of next year? Yes. Do we think we can avoid it? No. So we think at a minimum we'll take out 3,500 sometime in the first half of next year. And yes, that bear case, unfortunately, is alive, and that's 3,000.
In the meantime, Mike, let's get one final call from you. What would you buy and hold right now going into year end? What would it be? And it could be away from the index. You tell me.
Yeah, well, I think it's bonds. I mean, like I think that if you think about bear markets that are punctuated by either economic or earnings recession, we think we're going to get at least one of those, the earnings recession. The sort of order of operations is very clear. You want to buy you want to be cash first, then you want to buy treasuries, long duration, then you want to buy credit, then you want to buy equities last. So, we're already a lot of people are already overweight cash. So front end cash, or you own back-end treasuries. Now, for a trade, okay, we think it's NASDAQ or, long duration stocks will like that move in rates lower. But that's more speculative. That's for the trading community. I think for the investment community and for asset owners, it's basically bonds.
Okay, guys, so you heard the man himself. He is saying that to buy bonds. So to me, I totally agree. That means that they are all looking at the Federal Reserve to actually pivot very soon. Yes, indeed. So that's the reason why you can see the dollar is coming down, gold is going up, crude oil is going to go up soon. All this is going to push inflation again to the high level, and that is likely going to break the stock market. Now, just to let you know, the S&P 500, the current earnings now is about 194. So he's looking at 180, right? So that's about 14 points. If you do the maths, that means that the S&P 500 will drop at least by 6 to 7% from where we are right now at 4,000. So that means that mathematically speaking, we can see the 4,000 mark multiplied by 0.93 example, get about 3,700 level. That is going to be pretty interesting, because where we are right now is that everybody is so bullish, and that is where the concern is. Let me show you more in charts pattern. Now, this is S&P 500 right now, as you can see on the screen, and Mike Wilson is looking at a downturn soon, and that will bring the S&P 500 down to somewhere around 3,700 area. Okay, so you look at this chart, right? This is point A and this is point B, this is point C, and we have point D. So if you look carefully, right, we have pretty clear, very constructed downward trend, and the last time we saw was the market touches a downward trend and then tripped the MA200 and back. So I am actually looking at this very closely and see, look, if the market stays above the MA200 and above the downward trend, the market can still go up to 4,200 area, okay? But if the market fails to stay above the MA200 and goes down, then you look at the volume, right? As I mentioned, the volume is actually coming down despite we have a pretty strong rally. So if that market is to come back down and trip down to the midpoint, that is where we're going to see about 3,700. And of course, if things get a little bit bearish or things get pretty bad, we may even see the 3,300 level, which is what this Mike Wilson and team are also looking at that. So if you were to ask me itself, right, I think the range will be 4,200 for the upside, 3,007 for the base level, and 3,003 for the downside, okay? And of course, once we reach somewhere around here, probably we can do some buying, because that is how things usually work. All right, now I'll bring it to you the 20 plus bond market to share with you versus the gold market right now. You can see that. So what you can see is that once in the past, whereby the bond prices actually start to climb up at a very alarming speed, initially gold price will come down first, then after that, wow, look at the gold price, it just blossom. All right, so I believe that something similar will happen soon, and gold is going to go up all the way, and I think that gold will hit the 2000 mark probably by March next year. Okay, so take down, put it somewhere, and make sure that you remember what I say today. Okay, all right, so let us now look at the chart for today and see what do we have to talk about. But before that is, we have my 19 intake come in. Now I left only 7 seats. Okay, 7. So the cost is at 1988. You guys have probably missed the early bird special, but no worry, for 1988 you get 16 credits of the market, and you get the alternate market channel news, which I tell you a lot of stuff from the different top end brokers, and of course we have 2 months held our follow you channel. Now this channel is amazing because I have been doing pretty well. So this is something that I gave, and I tell you where to buy or to sell. I'll give you the take profit level, I'll tell you where to put the stop loss, I'll tell you my confidence level, and tell you where we are now, and of course explain to you shortly about why I think this short is good or this long is good. And of course people makes money, look at it, not bad at all, right? So if you press pay, if you join the TWB community, you get to get this channel for free. Pretty cool, right? So you can have this channel all the way until end of February. So guys, if you are interested, contact us through Facebook, we'll come back to you. All right, okay, let's look at the market right now and see what we have for today. Let's go. Now today we can see that we have the Dow Jones now staying very firmly at the technical level I mentioned at 34,027, and the upside potential is 34,768. So as long as the Dow Jones stays above 34,027, I don't see there's a reason why the market will come down. Okay, it's something that you must take note. Okay, and in terms of the technical aspect here, it's using the 5% rule. The 5% rule tells me that this particular level at 34,181 is a very crucial level. As long as the Dow Jones stays above 34,181, the upside could be back to 35,105. But once the Dow Jones go below 34,181, I'm pretty confident we'll see 33,258. So please make sure of this, take note of that, all right, in the market. Now the China market today continued to rally, break my trend line, that's pretty good, and staying slightly above it. Now I already said that the market will touch the MA200, and that's about 13,111 level. It will likely touch, but after it touches, the technical does tells me that there could be some profit taking coming in. So if you want to see that right now, unless there's another good reason that basically push the market higher, if not at this point 13,111, consider take some profit. Okay, now for the Dow Jones, the S&P chart, this is where I'm looking at. The S&P has a very critical 4096 85% resistance. So as long as the market cannot stay above the 4096, there could be a chance that it could have pulled back down to the 3855 level. Now overall, in my opinion, I think Nasdaq and S&P will still have the downside, while the Dow may have a bit more upside, but this upside gonna be really near to its end. In my opinion, I think that probably by another 6 to 7 days, things may get a little bit dicey. Yeah. Okay, let's just look at the gold market. Now this morning, last night I was telling my students, I said that gold will likely be trading 1815 soon. Why? Because we do the same thing. This is the 85%, this is the 90%, the midway point is at 1815, and I believe that today gold will likely be touching that, which means that the dollar will pull back down a little bit, which is actually happening right now. Alright, and of course if that's the case, the US dollar yen will likely be coming down all the way to about 132.80 level. Alright, pretty cool, because the KSI and the KRW, both of them are red at the moment, hence therefore the downside is kind of most likely going to happen. Okay, so if you look at the Dow now, a quick one on the Dow, let's take a look today. The Dow now is doing a DJDD for today. It's a doji directional day. KSI is green, but KRW is red. So what does it mean? That means that the boys are still buying. As you can see, that the buying came in strong, but the overall sentiment is actually weakening. So it is like if the price goes down enough, low enough, you can buy. Okay, but you should take profit on this day because you don't have the blessing on the two indicators. And of course, this indicator tell me that 34,264 is a pivot one. So if the market stays above OP, it's a classic buy. It can still go up up to the BNB RL at this 34,627 mark. But if the market really pulls back and go below 34,390, then of course 33,818 would be the first support, and that's about 500 points away. Alright, let's look at the Nasdaq, shall we? The Nasdaq today is also a doji directional day, but you can see very clearly today is an Omega day. Omega day means that the opening price and the closing price, the opening price and the opening price and the day high is the same level, and is actually, there's a huge stack at here, which is like the MA200 and MLP, right? So that means there's a lot of pressure. And of course, with the KSI, the boys are still buying. That's why you can explain the long tail, but the weighting is actually, the weightage itself is showing the negative side. So I suspect that, right, the Nasdaq may have to come back down to 11,849 in the near term, okay? And of course, if that is the case, then S&P 500 will be affected. It's also a DJDD. So the support will be the BNB RL at 4045. KSI is green, but KRW is red. So same thing like the Nasdaq, same thing like Dow Jones. We need to go slow. If you're buying from the bottom, buy and take profit fast. Don't stay on. Yep. Okay, so we have covered the US market. As I mentioned to you, crude oil. Crude oil, in my opinion, will likely pull back a little bit, all right? And then after that, the base support will be somewhere around here. The base support will be somewhere around $76, and I believe that if you can buy crude oil at $76, will be a very good bet. Now, if crude oil starts to move up again, then 83.50 will be the first target, all right? Now, you can see the KSI, there's some selling by the boys, as you can see long tail on top, but then the weightage is turning around, okay? So the moment, if let's say the KSI turns green and the weightage is cyan, then boom, usually that will be the upside thrust. So I suspect that, right, a pullback will be good, ideal for us want to buy, but if it doesn't really goes down much, that means that we are somehow rather about to move up, because you can see the BNB RL and the last few days, the way it stop here, tell us that this guy is about to move pretty soon, okay? Alright, let's look at the gold market, shall we? Where is my gold? Here we go. Now the gold market is now definitely trading higher. It's above my BNB RL extension. KSI is green, and of course it's cyan, so which means that the upside is going to go up, right? So my target is 1815. That is the technical level that I use mathematics. The technical side for TWB is about 1810 and 1819. Okay, I think that 1810 can take some profit. 1815 take more profit, and of course just push us out the limit for today, 1819. Let's see whether the market is going to go there, and could that send a sign to tell you that probably the equity market is something very curious to be entering right now. All right. Silver price, fantastic. I've been calling the buy on silver for quite some time already, but the thing is that you can see the boys are keep on selling off. Interesting. But the weightage itself is very strong, so that's why you need to have a combination of both. Okay, so in my opinion, silver may test 23.63 later on, but once it hits somewhere around here, a pullback will be justifiable. It'll be good. Now, if you want to buy crude oil silver, then you can actually look at this 21.61 level to buy. That is a BNB RL level, right? 21.61 level. And the last two will be Bitcoin and this, where are we? Hold on a minute. Here we go. Okay, this is the Bitcoin. Now, Bitcoin has pushed forward because the dollar has came off more. So that's why gold price goes up, crude oil price goes up, and the rest. So 17416 is actually the BNB RL level that was constructed many days ago. So likelihood is going to trip there. 8 in a minute. Oh, the high is 411, the target is 416, so you missed by a couple of dollars. Okay, KSI and KCX, you can see that once these two combine, green column, no blue column, that means it's very bullish. That's why you can see that the market shot up. So once you have all this information on your hand, it's kind of difficult to lose money in the market. So you just have to learn the TWB system, all right? And last but not least, we will have the Ethereum. Let's go Ethereum. Ethereum has also shown the power of it. KSI is green, no blue bars, very positive. Once it breaks the BNB RL, because it's a new BNB, I need to revise this. That means that once the market goes above the BNB RL at 1307, we're going to see 1363 coming up. All right. So overall, although that I think that the dollar will go up again, but with the ongoing more and more people actually looking at the Fed to pivot, that is not half surprised to actually see that happening. So I'm going to just bring it to you and just see a dollar before we go. Now this is the dollar. You can see on the screen right now. Okay, this is the dollar, and the dollar has just broke below the technical level of 104.50. So where is the next support? Well, the last time we saw a low was about here, and there's a 103.80 area. So you can see that the dollar comes off and the gold actually goes up. All right. So wait for a while, let the dollar come down more. But I think that based on what we see on the VIX itself, right, which broke below 20, we are somewhere very, very close for a potential turnaround soon. So watch out for this, guys. Things can really turn very nasty, probably from next week onwards. This is Cal signing off. I'll see you again tomorrow. Bye bye.